Good morning, everyone. Vince Lancy. Today's market rundown will be previewing a comment by UBS's CIO on gold post the election, an aftermath comment, and taking a quick look at something that Citibank said about gold with regards to central banks as well as ETFs. All right, let's start with the markets. Today, the 10-year yield is 442, up 3 basis points. The dollar is 106.51, up 36, stronger. S&P 500 is 59.27, up 12. American exceptionalism. VIX is 16.15, down 19. Gold is 26.31, unchanged. Had a range, 7 higher, 7 lower overnight, I believe, roughly. Silver, $31 even, down 20 cents. Copper, 415, unchanged. WTI, 70.06, up 45. Yeah, they're buying oil for this buy season, aren't they? Natural gas, 299, up 16. Well, they're buying natural gas because they need it, I guess. Bitcoin, up 1,100, also buy season beneficiary. Ethereum, down 20. Bitcoin's 93,500, in case you're wondering, if you're not seeing this. Palladium is unchanged at 1035. Platinum is 968, down 5. Gold, silver, a little bit higher. Grains all down. I guess people have to buy the G.I. Joe with the Kung Fu grip again. Wheat down almost 70 basis points, 563. Soy in second place, 992, down 7 cents, 72 basis points, 70 basis points, back and forth. And corn, 421, down a penny. Corn seems to be the unaffected market. Here's our front page. Goldman, buy gold, buy oil. You know, I didn't write this down, but I wanted to say something about this. Just a little caveat. All the banks are putting out recommendations to buy gold, and I believe that they're actually genuine. I'm also going to give you some quickly before we get into the good news, right? Look, we're post-event. Buying dips post-event is dangerous, even if people are telling you that it's okay to buy a dip. Okay? So you just have to be selective about your price. That's first of all. Second of all, there's a comment embedded in the Goldman report that says it's framed bullishly, and it's not bearish, right? It says that while we see banks, central banks, buying a little bit less gold next year, we see that offtake being offset by ETF purchases in the U.S. And that's a true statement. It's been my experience when a bank, any bank, a good bank, says that we see central banks decreasing, and they extrapolate it in a very smooth line because they don't really know how it's going to decrease yet, but they know that it's going to decrease. They're correct. The problem is the central banks do decrease in a slow line, but the hedge funds front run the decreasing. So you get these dips. So it's kind of like, oh, if the central banks are going to buy less gold next year by 2%, that translates into a decrease of 5%. Sell it now. Okay. And what ends up happening is the prophecy fulfills itself. The central banks either sell on the lows or they don't sell at all. And in this case, China will just be buying. And that might be what happened last week, although I'm not sure. Anyway, all I'm saying is that, you know, after the election, buying dips is dangerous. And we got a nice dip. And UBS is, you know, all over that. And it was bought. And I like it. We got one of those fish hooks that I like to see. I just don't want it to go below the 100-day moving average again, or go to it again, at least not for the next, I don't know, 13 years. You get my point. Okay, so let's go to the actual stories. All right, so here we go. On to the good news. UBS says to wake up the neighbors on gold. We believe central bank buying, this is them speaking, we believe central bank buying driven by de-dollarization trends should continue in 2025. Now, they have a a chart with that showing a little bit less gold being bought by central banks, as did Goldman. They continue with our end of 2025 target remains US dollar 2,900 an ounce, and we see opportunities to buy dips alongside evidence of fading negative price momentum. Technicals signal strong support at around 2,500 per ounce. Also, we suggest around 5% allocation in a US dollar balanced portfolio and remain long in our asset strategy. I love that statement. Okay. Uh, if you're not a technician, they're very nicely putting technical analysis in their fundamental thing. So what they're basically saying is we think it's going to 2,900 ounces for all of these reasons, restated, fine-tuned, and we believe the sell-off post-election is the hangover. It's got to happen after the election. And we believe dips are to be bought. We see an opportunity to buy those dips alongside evidence of fading negative price momentum. So you might see a MACD, an RSI not confirm a low, or you might see, by the way, this came out like the day of the sell-off that stopped at the 100-day moving average, or you might see long wick. So I almost feel like they bought on this. And when I say they, I mean them, as well as their clients. So technicals signal strong support around 2,500. All right. When a bank says technicals signal strong support 2,500, there may be there, but they're not buying. They're not waiting for 2,500 to buy it. The last time they said this, they said, we think last year after the December debacle, December 4th, UBS said, we're not bullish now because they thought it was overbought from that night. And we see tactically bearishness with strong support at X. And it just never got to X. You could just sense that everybody was buying it right above X. Anyway, so that's the point. So the full analysis on that, it's a short note, it's an update, but it's from their CIO, and that's their firm's view on the asset for their own business, not just their clients. We'll have that for you later today. Citi Bank put out a little brief we saw yesterday, and that's part of a chart. We're teasing you. They put out a couple charts, and I'll tell you the comment. The comment was, paraphrasing the comment, they see ETF sales slowing and central bank buying firming. So they say that central bank buying is returning at these levels, and ETF selling is done. Now, if you see that chart there, that chart is just November. And in November, that's Westerners puking, CTAs, mom and pop, small hedge funds. That's them selling. And before that, it was nothing but buying for months. Anyway, so since August. So Citibank is actually saying that ETF selling is done. You rarely see a bank come out and say that ahead of time. So on the central bank buying, I wouldn't know if they're right because they see the flows in that way that I do not. I wanted to circle back to this. We just sent this out to everyone. Special, Trump's return is the death of globalism. I've been speaking a lot about corporatism. Not a lot, but enough that if you listen enough, you hear it. And people are trying to figure out what Trump's policies are all about. If you look at them all, where do you connect the dots? Well, here's the dots connected for you. I'm not spelling out corporatism in a long essay, but I'm giving you some nice bullets that give you an idea of how to group Trump's policies in a constellation. What will he do next? Well, if he thinks this way, what will he do next? And that's it. Now that's the preamble to an excellent report, analysis of an excellent report by Stephen Blitz and Grace Fan. Trump's return is the death of globalism. That's my title. But basically, they go through what his policies are, what they'll do, and very, very a more macroeconomic version of what I would say Michael Every did. So it's about 1,000 words. You can read that. I would suggest strongly, if you're saying to yourself, what the heck is Trump? Right? What is he? Right? Is he libertarian? No, he's not a libertarian. Is he a patriot? Yeah, he's a patriot. Is he a nationalist? Only if he has to be. Is he a nativist? Yeah. Is he a mercantilist? No, he's not a mercantilist, but he's perfect for the time. And that's good. Uh, does he hate financiers? Oh, yeah. He hates banks. I don't care how many Goldman Sachs people he hired the first term. He was just trying to be liked. This time is his second term. He doesn't need to be liked this time. All right. So anyway, I recommend that to you if you're asking yourself, what the heck is Trump about? News and analysis, special Trump's return. That's what I just mentioned, right? Goldman buy gold, buy oil. They're buying the oil now. Three real reasons for gold and silver to rally. That's the podcast version. And at the bottom, you see a couple other posts. That's the Tuesday PM post. And this is an unlocked post. Russia and the BRICS nations will not keep using the dollar. That's a Schiff story. I think it's Schiff, but I thought it was pretty good, so I threw it up there. Moving on, market news. Lots of market news. Nothing really caught my eye that was, worth commenting on, but except President-elect Donald Trump is tapping Cantor Fitzgerald LP Chief Executive Officer Howard Lutnick to lead the Commerce Department, Bloomberg reports. Significant. He's not the Treasury. I guess that's what you would do if you're smart. If half the people want Lutnick and half the people want Besant, you just pick neither and put them somewhere else. Politics, geopolitics, good cop, bad cop. Russian President Putin is reportedly open to talking about a Ukraine ceasefire with U.S. President Trump via Reuters citing sources. And you can read all that. Instead of looking at Trump versus Biden, look at Trump with Biden. Biden is saying bomb Russia, and Putin is saying, I can't wait for Trump to get in so I can have someone reasonable to deal with. So, in a sense, Biden's the loose cannon. I mean, not in a sense, he is the loose cannon, and Trump is going to be the escape hatch for Putin. Not to say that Putin's scared, but I am to say that look, Biden does something stupid, Putin's going to push back. It's kind of like how Reagan used to threaten. Reagan used to be good cop, bad cop in one, right? So now you got anyway. Just a way to take it geopolitically. If I were the CIA or I were influencing the two administrations, that would be a good way to end the war. You're on your way out, threaten, throw a couple bombs over there. And then there's Trump going, I'll help you. All right, kind of the opposite of what Reagan did when he took over after Carter. Data on deck, housing and talking. And there's the Citibank statement that I paraphrased up there, along with the charts. We will have the UBS analysis to you later on today, but in the meantime, you have the Trump globalism thing. So there's the gold chart, the daily. There's the 100-day moving average. I'll reiterate what I said yesterday. Above the 100-day moving average, it was bought above the 100-day moving average. Now, everyone's going to say to you, that's a pure technician, they're going to say, if it goes back down there again, it's got to hold, or it will hold, or buy it and risk a sell below. And that'll probably be accurate. There's a trend line you can draw on here as well. I won't draw that trend line, but you can draw it. And I'm saying to you, if it goes back down there, yes, you should buy it if you're bullish. But I don't think it's going to hold if it goes back down there. Because if it goes back down there, that means it didn't get above the 50-day. Okay? It didn't get above the 50-day, and it goes back down there. That means the 50-day is going to start turning. And when it turns lower, the bears come out. And when it crosses, what do you get? One of those death crosses or iron crosses. And then the bears really come out. And then we run them in a couple months. But in the meantime, you're bullish, right? And if it gets above the 50-day moving average, you're way bullish. If it gets back down to 100-day, temper your bullishness. Same goes for silver. Okay? Same idea. Copper is already telling you. Copper. This 50-day moving average is, if this 50-day turns lower, and it probably will, they're going to start selling copper. Will they sell silver too? Yeah, they'll start selling silver too. Will they sell gold too? Yeah, they'll start dipping their toe in and selling gold. But that probably won't be for months. Oil, right? Okay, you're supposed to be selling rallies up to these moving averages if you're a moving average person. On the other hand, suppose the market just chops sideways, just like gold chops sideways in between the moving averages converge and move, and then people pick a direction and it goes off. So oil's in a range, right? I mean, here's your big range, and here's your oil's getting ready. Look at how viciously that was bought. Gotta like it. Let's put up Bitcoin for a second, if you don't mind. Yeah. Ugh. Guess what they're buying for Christmas? Okay, I'm Vince. Gold's unchanged. Have a great night after you have a great day.